We're talking about the cost of fuel, what this company like Lafarge, WAPCO, and I believe Dangote perhaps also uses that. Well, they said that one of the things that impact on their earnings is what they spend on their low poor fuel oil, and they're looking now to invest in cheaper coal because there seems to be this lingering gas supply shortage for them. So if they're able to shift or just completely abandon the LPFO and get enough coal to power their plants, will this have any significant impact on their bottom line?
Very, very significant impact. In fact, the major cost of production is power. You just have the raw material, limestone, and then you need a lot of power to power these massive engines that they use to produce cement. So if they can bring down the cost of cement, you'll see a massive increase in profits. And all the cement plants anywhere in the world have the same issue. And most of them run on coal or gas, if they can have sufficient gas.
But we've always had coal. know a lot of that is concentrated in the east, a state like Enugu. Why can't we, before now, tap into this very rich resource that's free, that's just lying there below our soil, and I believe it's even getting into the water, the system of the state. They're having a problem with that. We have so much coal. Why can't we tap that?
Well, the same reason why we haven't done a lot of other things in the country. You not just organize, have the right political will, have the right framework, legal framework for private investors. Before, coal production was a national monopoly by the Nigerian Coal Corporation. Individuals and private companies could not get in. But the law has now been, the whole privatization policy review means that individuals can go into coal. And then they have started, Lafarge has gone into coal. They are using coal now in Lafarge Shaka, there in Gombe. And they are obviously going to use coal in all their plants and significantly reduce cost.
So that'll definitely free up more cash to spend and perhaps even expand and build more factories. So for an investor, if you're looking at this stock or holding on to this stock, what would you advise an investor hold on to this stock, looking at the bottom line, looking at the future plans, looking at what they've said, in terms of investing, trying to save more money by going into cheaper energy? You think this is definitely a stock to hold on to?
In fact, Lafarge as an investment is even more interesting because not only are they the oldest cement producer in Nigeria, they are part of the world's largest cement manufacturing company. So they have the access to continuous technical and financial support to grow as fast as they can. And they have the extra support and security of being a very large institutions around the world. So your investment there is much more secure, if you like, than a business that is significantly owned by a few individuals.
Okay. All right, let's move on now. Let's leave the building materials. Let's quickly move on to the conglomerates under the diversified industries. Let's start with UAC, second quarter results for this year. Gross revenues came in up 16.1% at 30.5 billion from 20.6 billion previously. Profit before tax was also up 10.9% at 3.4 billion from 3.1 billion. Modest climb there. While the net profit or the profit after tax came in up 17.3% at 2.1 billion from 1.8 billion previously. A modest climb, but for UAC, were you expecting more?
Not really. UAC is a typical conglomerate. It has businesses in all the sectors, many sectors of the economy, not all, but several sectors of the economy. So you expect their performance to mirror the performance of the entire economy. So if the economy is growing at 7% and they can do twice of that, that's good.
But they've been around for a very long time. They're a household name, and perhaps people would think that with years of expertise, years of experience and all of that, perhaps they should have mastered the environment or the system as it were, and looked for being more creative in their looking for businesses that will turn affect positively their bottom line, and then perhaps have more better numbers.
They can't do that all the time. During some part of their history, they were doing much better than this, and then some of the sectors where they had investments were doing very badly, and they have moved out of those things. They were owners of AT&P and several other companies that were M&E that were not doing well, which they have scrapped. They are now focusing on like food and building materials and things like that, where there is steady, predictable demand. And so they are also in the transition away from their sectors that were not doing well in their business to sectors that are doing very well. So over time, you will see slow, steady improvements. You are not going to see a massive improvement because they are in so many sectors. If they were to cut off several sectors and zero in on, say, for example, just food alone, they probably will grow faster. But they have always been.
It looks like they might be just be doing that now, because we do know that now they have now become the co-investor for livestock feeds, which is also listed on the NSE to provide desperately needed, as I said, operating capital for livestock feeds. Is that? Do you think that was a good business decision?
It's good business in the direction you want to go. If you look at the population of the country, you want to go into mass consumer products for which there is steady demand: food, housing, transport. So if you can move more and more as a conglomerate into businesses that are connected with mass consumption, then you are likely to grow faster. So you're going to see UAC moving more and more into those areas and less into, say, durable consumer goods or construction, where they had a lot of investments. You're going to see them transit. It has started. They are continuing their process, and that's why it's going to be gradual. The results are going to be gradual. Every year they will improve their performances across the board. All the performance parameters are going to keep improving, but you are not going to see like a 50% increase in profit next year or anything like that.
So is it, looking at this stock, is this a stock that you would say investors are or have been, because we know it's been around for a very long time. Well, let's just stick with recent times in the last 4 or 5 years or so, that this is a stock that investors are happy with in terms of what they've been giving out in returns and especially dividend payouts?
So compared to other investment opportunities on the stock exchange, you probably say they are not very happy with it. But if you are an informed investor, you want to have a stock like UAC in your portfolio to balance your risks, because those that are doing very well, paying you high dividends, also carry some risks that a stock like UAC does not carry. UAC is well balanced. It has businesses in several sectors. So if some sectors are not doing well, others are doing well. So they are quite balanced. But if you invest in a company that is a mono product or a mono service business, if, for example, you invested in a bank and that bank just wasn't doing well, everything was lost. But UAC will always have something to balance its risks and show you some profit, pay you some dividend. It won't be the highest in the market. Okay,
so if 2 or 3 arms of where its businesses are not doing so well, it can always look to the others to bring in something.
So as an investor, you are assured that, one, you get dividends on a very predictable basis, and this stock will continue to grow. So it's a typical stock that you buy early in life, or you buy for your children, because as they grow, the UAC or the UACs of this world will continue to grow. So it is a gradual building of wealth that informs buying a stock like UAC.
Okay, so a stock you want to buy today, sell tomorrow?
Not really. Not really.
For someone just keep in your portfolio, just really. Watch it mature.
Because it's difficult to predict how quickly a UAC will suddenly make huge profits. It's easier to take an institution that deals in only one product and say, okay, this company is going to this industry. For example, a lot of houses are being built now. If I buy invest in a stock that is building houses, they will finish the houses, make a lot of profit. But you can't say that of UAC, because there are so many businesses in the mix that you are only sure that they will continue to grow slowly and steadily. But they will not make this massive profit for you to speculate on that in 2 or 3 months or so you can just make profit and come out of it.
Okay, would you hold on to a UAC stock if you
had it? I would hold on to UAC definitely over time. I will put it in my portfolio, maybe 10% of my portfolio, 20%. I won't put 80% of my investment portfolio in UAC, but I want to have UAC there because it balances your stock. It gives you some security in a volatile market.
Okay, looking at from the conglomerate, there's so many of them, the raft of them that we have, the market has received, but obviously we can't go through them. That's why we just picked some of the leaders and some of the sectors. Now, looking at from the conglomerates down to the building materials and even the banks themselves. Okay, let's just stick with the conglomerates and the building materials. Looking at the future of these companies, the operating environment, some have been able to weather the storm, some haven't been so lucky. But the future of these companies as regards vis-a-vis the operating environment in the country, do you have faith that somehow these countries or these companies will continue to just break through that a challenge and just continue to make more profit?
As for the building materials,
for the building materials,
the market is there. We will continue to build houses, so the market is definitely there. What will make the difference is the quality of management.
Okay.
That's why an investor is always behaving like an owner and say, who are the people managing my business? If you have good people managing a building materials business, they will be able to weather the storm and they will do well. But if the management is erratic or afraid to take some risks to expand even when the construction is low, then they may not get the opportunities when construction picks up.
Okay, finally, Gabriel, before I let you go, looking at the earnings, second quarter earnings for these companies, are you impressed? Would you say they're good enough considering what they have to go through in terms of operating costs and all of that?
Generally, it has met expectations in the sense that most observers of the economy expected that by now we will be coming out of the very, very bad situation in the last 2 years. So we are beginning to see all companies are coming out. We are beginning to see positive results. We expect this to grow slowly but steadily. And as some major issues are addressed, the privatization of power, for example, if the privatization of power going on now is completed, as we hope, then we expect that next year you will see a very significant improvement, anything between 10 to 20-30%.
Okay, because the big manufacturers will get more power to spend less on energy. Absolutely. And focus more on
and not only the big manufacturers themselves, the suppliers, the subcontractors to these big manufacturers. Because if you ask a supplier to produce paper for you, to produce packaging material for you, and he's using a generator, this cost is going up. Sometimes the generator breaks down. But if the entire supply chain is now supported by a more efficient power supply, then of course you expect improved performance.